Markets have already fallen a lot. So the worst is probably over, right? No. What you're seeing right now is just the beginning. Because crashes don't happen once, they happen in phases. And most people realize that only after they're already stuck. Stay with me till the end because I will show you the three phases every market crash follows and exactly which phase we are in right now. If you understand this, you won't just avoid the losses, you will know when the real opportunity actually begins. Most people think a crash is one big fall, a sudden drop, panic, and then recovery. That is not how real market declines work. Real corrections are structured, they unfold in phases, and each phase feels completely different, which is why most investors get trapped not at the bottom but in the middle. Now, the first phase is the shock phase. This is where the first drop happens. News start turning negative, markets fall sharply, fear begins to build. But here is what's important. People don't panic yet. They just see this as an opportunity. They think this is a dip. So they start buying. Now, this is where confidence is still high and risk is still underestimated. And then comes the most dangerous phase, the one that traps the maximum number of people. That is the false recovery phase. After the first fall, the market bounces. Not strongly, but enough to create confidence. People start saying, see, it is recovering. That was the bottom. Now, this is where retail investors enter very aggressively because now the fear is gone and confidence is back. This is not recovery, this is where the trap gets filled. And just when people feel comfortable, the market does something they didn't expect. That is the third phase, the slow breakdown phase. Now, the market doesn't crash suddenly, it moves down slowly. Lower highs, lower lows, week after week. No panic, just continuous decline. And here is the problem. By this time, people are already invested. They don't exit, they don't average correctly. They just hold and watch their capital slowly erode. Now, this is where real damage happens. Not in the fall, but in the time spent being wrong. So, the real question is not will the market fall? The real question is which phase are we in right now? Right now, we are in phase 1, the initial shock, which means fear has started but not peaked yet. Buying has started but not trapped yet. Confidence is still present. And that is exactly why this phase is very dangerous because it feels like an opportunity before it becomes a problem. So, how do you avoid getting trapped in phase 2 and phase 3? Right now, your job is not to predict, your job is to wait for confirmation. First, don't rush phase 1. Secondly, be cautious in rebounds. Third, wait for structure and change. Most people don't lose money because they don't understand the market. They lose money because they enter at the wrong phase. Right now, you still have an edge because you can see it very early. If you understand the phase, you control your timing. And in markets, timing is everything.